Good afternoon and welcome to BizTech's Asian Midday Market Watch. I'm Brian Fernandez and it's Wednesday, the 7th of June. And we have our guest today, Craig Erlam. He's a senior market analyst at Oanda. He's coming to us out of the UK. Now, Craig, it's always great to have you on the show. It's very early in the morning for you.
Yeah, it's always a pleasure to join, Brian.
Now, Craig, before we get your insights, let's take a look and see how markets in Asia have performed in the first half of the day. We're going to start with a look at crypto markets first. The main two, Bitcoin is at 26,953. It's up 4.47%. Ethereum is at 1,879. It's up 3.38%. Looking across to regional equity markets, we start with Singapore. The Straits Times Index is down 0.33%. Bursa Malaysia is down 0.39%. Shanghai is unchanged. ASX All Ordinaries is up 0.13%. The Nikkei is down 1.12%. The Hang Seng is up 0.88%. And rounding up the numbers, we've got the Kospi, which is up 0.23%. Craig, your view on market performance in the first half of the day?
I mean, we're in a very odd time, should we say, in the market. I think we've spoken about this last time I was on. For me, the summer was always the point at which we get a much better understanding of where we stand on the inflation outlook and therefore interest rates. And ultimately, that's going to determine everything. It's going to determine the resilience of these economies. It's going to determine the kind of the strength of the economies going into next year. And so far, we haven't had the data we've wanted. It's no ignoring that fact. In the UK, for example, inflation has proven far more stubborn. Interest rate expectations have risen considerably. In the US, we've seen a little bit of progress, but at the same time, we haven't seen the strength that we want in terms of the changes in the labor market. We haven't seen inflation fall to an extent that makes people feel comfortable. And therefore, we're still none the wiser. And then you look at China, where the economic recovery and the rebound from the zero COVID restrictions, it hasn't taken off in the way that it looked as though it was going to earlier in the year. And I feel like rather than have more clarity, we have more confusion. And I think that really reflects the markets right now. There has been an AI-driven boom in many aspects, but it's not inclusive of other components of the markets, which makes you question its sustainability. And until we get more clarity over the questions and the topics which I was just alluding to, most notably around the labor market, the economy, inflation, and interest rates, I think broadly speaking, those AI stocks aside, we could just continue to see these kind of choppy markets that we are still seeing.
Fundamentally, then, where do you see the trading opportunities for investors right now, given all the uncertainties, given the numbers, and the numbers today out of Australia and China are not great. So Australia's growth numbers are slowing down amid the rising rates. The RBA raised rates by 0.25% yesterday. And today, also late this morning, China's exports numbers came out and they plunged 7.5% for May. So where do you see, through your Oanda lens, the trading opportunities for investors right now?
So again, you're kind of looking at it through almost two different lenses. The first is that in this type of situation, when there is so much uncertainty, so much unknowns, and we're seeing signs of parts of the global economy slowing, and like I say, you look at those Chinese trade numbers, they're kind of consistent, I guess, with a lot of the external trade data which we're seeing from other countries. You always look to kind of South Korea for more confirmation of this, but we've seen weak export numbers from there for quite some time. The same is true with Japan, but also other areas of the world as well. We are in a manufacturing recession, so goods trade recession as well. So these Chinese numbers kind of continue to confirm that story. And then you look at Australia as a test case as well. We're seeing slower growth, and we're still seeing rising interest rates because inflation is still proving very stubborn. So that's a very difficult phase. And ordinarily in a situation like that, where we're seeing rising interest rates, high inflation, and slowing growth, then it would be natural to take a more defensive stance because you would think that this is not a market that is primed for equity markets performing particularly well. And then you look at Europe and the US, where equity markets have performed really quite well. And in the US, that's a lot driven, like I say, by these AI stocks. And you've got to ask the question, can this continue against the backdrop of what we're seeing? And there's whenever you question those things in the markets, there's always, in my view, more chance that they can continue, even if the logic is a little bit defied. The thing is, right now we're seeing an AI kind of boom, in that we are seeing this explosion of new ideas and new ways in which the AI could revolutionize the way businesses do things. And that's why we're seeing this explosion in these stock prices, even when the macro environment is not so good. So it's obviously a risk to see kind of one of these areas of the market performing so well when other areas of the market's performing less well, and the macroeconomic backdrop is less positive as well. And in that sense, then a more defensive stance is always more suited to this type of environment, as I said earlier. But when you're looking at what we're seeing in AI stocks right now, it's hard not to be excited.
Now, Craig, thank you very much for your insights. Thanks for coming on the show.
Thank you.
I'm Brian Fernandez, and we've been speaking to Craig Erlam. He's a senior market analyst at Oanda. This show will be on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.